So the Hong Kong market is down around 0.4%.
It's possible and probable that inflation comes down pretty well in the first half.
Enterprise balance sheets have never been as strong as they are today compared to 5 years ago or 10 years ago.
On TVS Motor, they have a target price of 1250, and on Tata Motors, the new target price is 460.
The Nifty is now down about 10-13 points. Very, very quiet opening.
Continue to buy IT in small bites over a period of time.
JLR numbers are up almost 6% quarter on quarter and almost 15% year on year.
They've received approval from the Spanish government for reimbursement for Lupin's drug, which is basically branded as Muscula.
Currently down 130 points on the Nifty.
I would say this is just more profit booking at this point in time, but otherwise, flows across schemes, I think, are quite healthy.
Demolition of dangerous buildings will start in Joshimath today.
As far as the markets are concerned, they continue to be under pressure. A wee bit of recovery is what we've seen from the lows.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant Nair. With me, my colleague Reema Tendulkar in the studios, and Nigel joining us from the newsroom floor. Guys, hi. Good afternoon. The market is down and it's deep in the red. Some 200 points lower is what we have on the Nifty. And I would say that this is a bit of a puzzling fall because what we are seeing here in India is not kind of represented mostly anywhere else. You look at what's happening in Europe, you look at what's earlier happened in Asia, US futures are not too bad. I mean, global cues on the whole are not too bad at all. To boot, you've got a decent rally in the rupee. I mean, the dollar rupee is down, which means the rupee is higher. About almost a 0.5% move, actually 0.75% move, is sort of, a reason which is being given is that the accumulated benefit of the fall in the oil, the price of oil, which we've seen over the last 10 days, 12 days, is showing up in a big way in terms of the currency. We are one of the largest importers of oil, and a fall certainly, most certainly, does help. Could you blame what we are seeing here in India to the Powell speech? I mean, you could, but the point is, why would India in a way be singled out? It would show up the nervousness if this was because of what Powell would say later today would show up in other markets as well, but it is not. In any case, I mean, the speech is important for just one reason. In the last FOMC minutes, that is last week, that is the December FOMC minutes that we got last week, the minutes showed that the Fed members were extremely unhappy about loosening of financial conditions. You could kind of interpret that to say that they don't want the markets to rally significantly. Higher markets, according to them, makes their job difficult to bring inflation under control. Well, since those December minutes, markets have rallied in the US. Dollar is down substantially. So will we hear a pushback against these easier financial conditions? And that remains the risk. But as I said, I mean, is it just that? Because, I mean, it should show up in other markets, which it is not. In any case, I mean, the recent lows of 17,800, the exact low which was made was 17,774, which is last Monday, 26th of December, was that low. So the broad range about 17,800 to 17,780, I mean, that is the range that you want to keep in focus. That comes into sharp view. We're not very far away at about 17,874. So, I mean, I think, as we trade and come back tomorrow, we'll have what, the Fed chair has said, we'll have the global market reaction to that. Hopefully, we'll have the dollar where it is, which is weaker, much weaker as compared to 3 or 4 days back, and we should be in better shape tomorrow. Of course, all of that depends on what, Jerome Powell has to say later today. Reema, hi.
Hi, that's going to be important. And the US CPI inflation print on Thursday.
Yeah.
Those will be the two important global economic indicators to track. But for our own markets, as Prashant was pointing out, it's the level of 17,774, which is the low that the Nifty hit on the 26th of December. That's going to be very crucially tracked. Today, the Nifty breached the 100-day moving average, 17,906. It was hovering around that level for a very long time, but it's finally broken that level down. And from that level, we're lower by close to about 35 odd points. So after you break that 100-day moving average, the next important level will be that 17,774. Talking about the way individual stocks and sectors have moved, IT has made a recovery, and a pretty good recovery from the day's low. The Nifty IT index has recovered close to about 0.8%. This doesn't capture it, but let's pull up the intraday chart of TCS. TCS is only down 1% right now, but at the day's low, it was down close to about 2.5%. So from the day's low, TCS has recovered 1.5%, and Wipro is now back in the green. The PSU Banking Index has taken the brunt of the fall today. The Nifty PSU Banking Index is down close to about 3%. And metals is another global denominated sector which is losing its way. The Nifty Metal Index is down close to about 1.5%. Nigel, what are you looking at?
Well, as you all have been saying, the Nifty 50 has gone ahead. It's broken the 100 DMA odd mark. The Nifty Bank, that's the problem pocket. We thought it will start moving higher, but it's underperforming yet again. So last few sessions, it has underperformed, and today as well, it's continuing with that underperformance. For me, the glimmer of hope is the mid-cap and the small-cap indices. They're down between 0.4% or 0.5% odd. So they're doing a relative outperformance in comparison to the headline index. On the options data front, the 18,000 call, 18,100 call. Well, between them, the total open interest added is close to around 1.5 crore shares. So massive writing is what we're seeing at both those two strikes. The hope again is that the 17,900 put, that's seeing a good amount of open interest build up. Last I checked, close to around 15 lakh shares were added out there. The premium out there is between 80 to around 90 rupees. So you deduct that 90 rupees from around 17,900, and that's giving you a bit of a support zone, which comes in at around 17,800, which incidentally, we bounced off those levels. So on a closing basis, well, we'll have to keep an eye out on today's low at 17,860, support at around 17,800. We have defended that mark twice. The hope is that from the bullish perspective is you defend that yet again. The other point is, whatever the Fed chair has to say, maybe part of that is already getting discounted if it's going to be hawkish. And that's why, in fact, we're seeing some bit of nervousness on the screen. Final 60 minutes, let's see how this one goes.
It's also the financial markets options expiry today. But let's tell our viewers what we have for them on closing bell. Jaguar Land Rover posts a strong 15% growth in sales and a record order book, raising hopes of better margins and higher cash flows for Tata Motors. Details on the show. BofA also remains positive on autos. Key highlights from their report coming up on closing bell. The rupee rallies sharply by 2/3 of a percentage point as dollar and crude prices fall globally. Details on closing bell today. We'll discuss the market technicals with Jay Bala of cashthechaos.com. We'll discuss stocks and portfolio ideas with Abhiram Eliswarupu of BNP Paribas India.
All right, how should you position yourself in the last hour of trade? No reprieve, no respite. Mitesh, afternoon, 17, matter of time before we revisit those lows from the 26th of December? Or you think, are there any signs of a turn, even a minor one?
No, Prashant. I think, yesterday the rally was good enough to pull all the indicators on the upside on the hourly charts, but today's decline has kind of negated that. In fact, below 18,000, there is no point of remaining long. So I think very clearly a test is definitely there. But what is important is that last time when we tested that level, we bounced back to 18,250. This time we could not even clear 18,150, which means that the support level is coming into play, but the bounces from there are getting weaker and they are making lower highs. So I think eventually that is clearly, suggesting that the probability is on the downside break. So I think I would prepare for that. And with that idea, I think the 17,720, 750 mark should be tested, and below that, I think good chance that the 200 average, which is at about 17,265 zone, I think that could be tested as well. So there could be more declines given the fact that, this entire 17,800 to about 18,250 that bounce back will evolve as nothing but a continuation contracting pattern. And if it breaks on the downside, which is what it looks like, then I think we have more declines at hand. I have, in fact, 2 sell calls right now. Colgate is something which is breaking down. So that's a sell. Keep a stop at about levels of 1,515 and look for targets of around 1,450 to begin with. The other stock on the sell side is Concor. Keep a stop at about levels of 733 here. Look for targets of around 685.
Okay, got that, Mitesh. By the way, the Nifty is on the verge of revisiting the lows that we saw earlier today. And the problem today is a couple of large names, they are seeing a bit of selling. Whether it's ICICI Bank, whether it's Reliance Industries, just pull up both those two charts. They're heavier weights, they've moved to the low point of the day. Kotak Mahindra Bank as well has suddenly seen some selling pressure. So a couple of these names, they're larger weights, they're moving lower. They're dragging the Nifty Bank low and the Nifty in turn as well. But one stock that's doing pretty well is Tata Motors. The top gainer on the Nifty on the back of very strong showing from JLR wholesale numbers. Sonia is standing by to fill us in with more details on that. Sonia?
Well, thanks a lot for that. Tata Motors is not only the biggest Nifty gainer today, but the gains that Tata Motors has seen is the largest single-day gain since May of 2022. Now, the reason is that the JLR wholesale numbers have been very strong. It's a 15% growth year-on-year. It's also a 6% growth on a quarter-on-quarter basis. And this is because the supply-side issues have eased for Tata Motors, and hence production has picked up, especially for its fast-moving vehicles. Now, Tata Motors said that they're sitting on a record order book of over 215,000 units, and a lot of brokerages have gone ahead and raised their target prices. In fact, CLSA has upgraded the stock to a buy. They have a target price of 512. They say that the improvement in the performance on the top line will result in better free cash flow generation for Tata Motors and help them achieve their guidance in FY24. Morgan Stanley says JLR will generate 400 million pounds of free cash flows, positive free cash flows in the year to come. In fact, if you look at the chart as well, this is the best wholesale number that we've seen in the last 4 quarters at least, and the trend has been moving on the upside. The stock is still a way off from its 52-week high though, but is one of the biggest Nifty gainers today. Back to you.
Thank you very much for that. Hemang Jani, retail equity strategist at Motilal Oswal Financial Services, is now with us on the show. Hemang, very strong update coming in from Tata Motors. The wholesale numbers are looking strong, 15% growth for JLR, and the hopes are that the free cash flow numbers are going to start improving and perhaps even beat the guidance that the company has given. How do you view Tata Motors now?
Good afternoon, Rima. I think definitely a positive read-through for Tata Motors. I think the order book now stands at almost about 215, units, and all the 3 businesses of Tata Motors are showing some sort of an uptick. The passenger vehicle story in India, which is a structural story. Also, the CV cycle is turning better, and you have some positive surprise come through from JLR. And the production data points also for their top 2 selling brands is showing some improvement. So in a scenario where the Tata Motor has been a big underperformer, this news has come in as a big positive surprise. And we see this as a, some sort of a case for about 7 to 10% kind of an uptick in Tata Motors, though it's a little difficult stock, but we have a positive bias on Tata Motors at this point.
Okay, all right, Hemang, thanks a lot for that. Hemang, just stay with us. Just a few minutes ago, we had some news flushing on the exchanges. And Max Finance, well, that's surging in trade as Axis Bank is going to go ahead and complete that transaction. Remember, they had 12% stake in their insurance arm. And now, in fact, they've got the go-ahead to go and get that 7% stake. Yash, he has been on top of this. He gave you all a heads up as well a couple of months ago that this is likely to be the case with the revised valuation. Yash, fill us in.
Nigel, as you rightly said, the context, 12.99% stake was acquired at a price of about 35 rupees a share. Axis entities were yet to acquire the balance 7% stake, and in between came the regulator saying that the pricing, the valuation is not uniform, it's not as per fair market value. In fact, both entities were even penalized. And now on October 19th, we had reported that IRDA is not likely to approve the transaction as per the current valuation, and that's exactly what has happened. Axis Bank has come out and informed the exchanges that they've entered into a revised agreement with Max Financial Services on January 9th. Now, as per this revised agreement, the balance 7% stake, which is yet to be acquired, will be done at a fair market value. And the mechanism for acquiring that 7% stake would be as per the discounted cash flows mechanism. This is the change which Axis Bank has brought as far as the whole valuation game is concerned. And as far as the transaction now is concerned, it will be beneficial for Max Financial for 3 important reasons. First one, of course, the deal, all the hurdles for this deal, they go out and the deal can go through smoothly. The second one, Max Financial Services, which will be the seller in Max Life, 2 Axis entities, will get more money for its 7% stake when Axis Bank acquires that stake. And the third thing, uncertainty over Axis Bank's bancassurance partnership with Max Life, that also goes away. So the OTC sales for Max Life also remain intact, with Axis Bank coming in at about 20% stake in the company.
Okay, all right. Thanks a lot for that, Yash, and congratulations. You're stuck to your guns, and in fact, you gave us a heads up on this. And as we speak, Max Finance, well, that's flying away. It's outperforming a market that's rather looking a little bit weakish as we speak. But Hemang, let's come across to you. Part of that re-rating, the good news is the deal is going through. The good news is that, in fact, the Max Financial, they'll be getting more money than earlier envisaged because, now they're likely to get a higher valuation. But part of this re-rating has taken place. I'm looking at the valuation front, and the stock is not as cheap as it was. What's your view at around 770 rupees on Max Financial?
So, Nigel, the way we look at this is that it removes, a key overhang for Max Financials, and given that, as per the new terms, the pricing will have to be slightly better. Means that there is going to be some positive impact on Max Financials. But our take is that within the entire life insurance space, SBI Life stands out in terms of the performance. If you look at the new premium collection and the overall traction, I think this one is better placed. So we have a buy rating on SBI Life versus the Max Financials at this point.
Hemang, I was reading the Motilal Oswal strategy note, which you released just earlier this morning, where you have increased the weightage of healthcare. And you are looking at Sun Pharma now a little more positively. Could you tell us what is it? Why do you think healthcare has turned the corner? Is it just the recent underperformance? Tell us a little bit more behind this weightage increase for healthcare.
So, Rima, what we are saying is that within the pharma sector, the healthcare is doing much better. And when we look at the overall growth for next, let's say, 1 or 2 years, what stands out is that even on a higher base, Apollo hospitals, will continue to do well. And we continue to see challenges on the overall generic space, across the companies. So we feel that within the pharma and healthcare, it would make more sense to have a higher component towards healthcare versus the pharma. And within pharma, we continue to like, Sun Pharma and to some extent Dr. Reddy's. I think these are the two names that we like at this point.
Okay, all right. What we'll do is Hemang stays with us and we'll take our first break on the show. 220 points lower on the Nifty is what we have. We are back with Hemang. We also will have Jay Bala of Cash the Chaos as always Tuesday afternoons for a quick check, technically speaking, on how the markets are set up. Stay with us.
Welcome back. The other big mover today is Sona BLW, which is in the fast lane. The company had announced the acquisition of a little more than 50% stake in a company which helps them get into the sensory market of electric vehicles, Nuvoco. I think that's what the name of the company was. Hemang, any thoughts on this particular acquisition done by Sona BLW of Novelic? I'm sorry. With this, the company has now built a third vertical for growth. So it continues to make efforts to make sure the growth rates remain intact. Your thoughts on the acquisition made?
Very positive long term. We think that this would add to about 10 to 15% of the revenue over a period of time. Currently, it is contributing about 3% of the revenue, which is quite meaningful. What is more important is that the company has made a lot of progress in terms of bringing products on the autonomous and connected technology side. So we think that given this development, people would turn more positive on Sona from a longer term perspective.
Hemang, any thoughts on IDBI at about 55, 56?
No, Prashant, I think a large part of this entire re-rating that we have seen across the PSU names, I think that story has played out. And it's time to, look at hardcore numbers and, what sort of growth companies can throw up. And from that perspective, we would have a more constructive view on some of the, larger private banks and select PSU banks. We would not really want to go out too aggressive on the second and third liner names where, the risk reward does not look that favorable.
Okay, all right. Hemang, thanks very much. Good speaking with you. Appreciate you joining in with that perspective and see you back soon. Well, 230 points lower on the Nifty is what we have at this point in time. Jay Bala is now joining us of cashthechaos.com. And Jay, good afternoon. Good to have you with us here as always. I want to start with the Rupee and the weakness that we are seeing. Very briefly, I don't know if you've seen the sharp appreciation that we have here. Chartically, how is it looking? And then we'll bring in our colleague Lata here to tell us what she's picking up as reasons behind, fundamentally the reasons behind the move that we're seeing. Go on, Jay.
Yeah, see, the rupee is on a depreciation path, and it's on a long-term depreciation path. And 80.5, it saw sometime in December, November. It's a ceiling for it, and it's not going to appreciate below beyond that. And we're going to probably see 87 in the next 4 to 6 months time frame. And I had put out a tweet on the 30th of December that December is usually a very strong month for the rupee, but whenever the rupee has weakened during December, it leads to weakness for the rupee somewhere between 4 to 6 months down the line. So we have a rare exception that's happened for the rupee, where it has closed below its open in December. So, all pointers are towards weak rupee from a 4 to 6 months time frame.
Okay, that's the technical view on the rupee. 80.5 is a very strong level, and it's unlikely the rupee is going to appreciate to that level or beyond. But Lata is here to explain what we've seen in the markets today. Lata?
Well, pretty much a leads and lags and catching up for the currency is what dealers tell us. There has been a significant decline in both crude and in dollar index. Both these were the reasons why the rupee had fallen so much, with crude seminally falling below the $80 mark and the dollar index way away from the 114 that it was threatening. Some level of appreciation in the rupee was called for. One saw that in the Chinese yuan. The yuan, if you take it since October, I mean, October is an important month since some tops and bottoms were achieved. Since then, the yuan has appreciated, at least 4 to 5%, dealers say. So rupee had to catch up. Until now, whenever the rupee was appreciating, the Reserve Bank was buying and replenishing its reserves. Today, it has just stood by. So that's the third reason why the rupee has appreciated. Fundamentally, it had to appreciate a bit because the irritants of crude and dollar are much less now, but RBI was buying. Its absence today has led to this precipitous decline in the dollar and rise in the rupee. The moment they step in, it'll stop appreciating. And some people say that below the 82 mark, that is around 82.80, there was probably some buying which resembled central bank buying. If you don't stop it, it'll go even to 81.50. But around 81.70, 80, apparently there was some kind of dollar buying even by the central bank. So perhaps today's appreciation is done.
Okay, Lata, thank you very much for that. Let's continue our conversation back with Jay Bala of Cash the Chaos. Jay, your call on the markets now. I know you're broadly very negative. You see the possibility of the Nifty going back to June 2022 lows of 15,300 as well. But just talking about the near term, towards the end of December, we thought the markets are breaking down. The Nifty had gone down to levels of 17,774. But from there, it attempted a rebound to 18,250, which again, from there again, we've turned and, started moving downwards. Your thoughts on the near term now? What is it that the charts are telling you? And what about the Nifty Bank, which has started underperforming?
Yeah, thanks, Rima. See, the short term has two possibilities, and either we see a new low below the 17,774 that we saw on the 26th of December, or we see a bump up right away, protecting 17,790 and going up to somewhere close to 18,300, 18,400. But whatever be the case, all rallies are likely to get capped below 18,450 or thereabouts. Not exact number, just thereabouts. But the important thing to keep in mind is you need to have some protective puts from now to middle of February. In my opinion, we're going to see shock and awe, a start of shock and awe for the markets somewhere between now and middle of February. So the extreme short term is bit questionable. We don't know. We're going to get a new low below 17,774. Or it's going to go see a pre-budget rally in the form of bump up to 18,450. But whatever be the case, you need to keep some protective puts.
Okay, all right, Jay. So 18,450, that's the hurdle zone. As long as you trade below that, you're looking a little bit cautious on the Nifty. One element that could swing the market a little bit in our favor is the weakness you've seen in crude oil prices. Now, we're hovering in that vicinity of around $80 odd, but we've come off sharply from the peak. Where do we head from here? Do you see a relief rally and then we see a correction? What are the broad levels you're looking at on Brent crude?
Yeah, I've been saying for the last 3 weeks or even slightly longer than that, Brent is going to see a very sharp decline from 87 or 90. We saw 87 last Tuesday when I spoke, and from there we've seen a 10% decline. And we're going to see further decline from here, and we're probably going to see Brent decline somewhere close to 60s first, then a bump up, then a 40s. But here's a very important point, Nigel. I've been saying this from 2010 on CNBC. Crude going down is not good for the equity markets. It might be good for India on an economic basis, but it's not good for the equity market. We've seen three episodes where the Brent has collapsed from high hundreds to mid 30s or sub 20s. Yet during those time, the markets didn't go up. The markets crashed along with crude because risk assets go down, go up in tandem.
Point taken. Very different implications for both equities and what happens to the macros as well. Jay, so got the broad sense. Be cautious. It's looking a little volatile out there. One doesn't know. The next jump could be. I mean, when I say jump, the next move could be a volatile move up or a volatile move down. Correct me if I'm interpreting you wrongly. So I have some puts in the portfolio in any case. What else, Jay? What else can one do? I mean, where are you seeing opportunities on both sides?
Raising cash to the maximum possible levels is quite important. And even if you're a long-term investor, in my opinion, we're going to get low-hanging fruits sometime in the middle of this year. And if you're going to not raise cash, you won't have opportunity to buy them. Holding portfolios as they are and seeing mark-to-mark decline is not a good sense, in my opinion. So I would say cash is very important here, and some investments towards precious metals. I would see that makes sense here. Because the dollar is slightly, weak. It could continue in a short-term correction or stay flat. That might give impetus to the precious metals. And so, some investment in precious metals might be advisable at this point.
What about the Nifty IT? The Nifty IT was down 2.5% in the morning. It's managed a pretty smart recovery. The Nifty IT index is only down about 1% now. Thoughts on the index and any individual constituents? Do you have a trade?
See, on the IT names, I've been seeing the 28,000 level as important level on the index. On Friday, we saw a close below that level. That has actually slightly weakened the overall short-term bullishness that I had on the index. Among the frontline names, HCL Tech is a relative showing relative stability, so it might continue to do that. But I like persistent from this point. But the important point here is if the markets were to go down below Friday's low, I think pretty much the September lows are going to be on challenge. So the markets might try to take out the September lows, and that might have a longer-term implication. The close below 28,000 on Friday is not a happy setup for me. I didn't like it, and I don't like it, and I would still be very cautious here. Except one or two names, you have to be very highly selective within the IT names here. Persistent and HCL Tech ranks top on that.
Okay, all right. Jay, one of the stocks that surprised everyone last year was ITC. Suddenly we stopped talking about that. In fact, it's corrected 10% from the recent peak. What's your view on it?
See, I think ITC is undergoing a medium-term correction, and it might have further highs to come through in the long term. But it has potential to drop somewhere close to 280. But as long as it stays about 325, it's relatively safe. But we don't want to see the stock drop below 325. If it does that, it can drag the overall index, and the FMCG index might drop below important support at 43,600. Right now, the sector as such is still in a slightly strong position, but it's weakened a lot than it was a couple of months ago. As long as ITC stays about 325, I think the sector will stay above 43,600.
Jay, you've seen what's happened with the US rates market. There's a significant fall, right, which we saw last Friday. The front end of the yield curve in the US, the 2-year, etc., went down 20 basis points. That was a significant negation of earlier moves. The data is kind of supportive, at least the recent data, in terms of that perhaps inflation is now last year's problem. Although these are year-on-year effects, so it'll take time, but can happen quickly as well, because the rate of change is what matters. What's your sense, Jay? I mean, just connecting the dots.
See, Prashant, the bond markets is one of the biggest bubble that's popped. We had a 40-year bull run for the bond markets, and the yields have turned around and they are going above a 30-year trend line, 40-year trend line. And the recent move about 388, 89 bips in the short term is telling me or giving the information that we are headed for higher yields in the short term. But in my opinion, it's likely to protect 340 bips for the US 10-year. And even if it doesn't, the medium to long term is strongly up from say 18 to 24 months basis. I see the 10-year yields going somewhere between 565 bips to 700 bips. So in the short term, I think 340 will get protected, and we're probably going to see higher levels even in the short term. But I'm very bearish on the bond markets.
Jay, gold has been one of the best performing assets last year. Can you tell us, do you think it will continue with the outperformance? What would be the key levels?
Yeah, see, precious metals are inversely correlated to the dollar. And since we are seeing short-term weakness in the dollar, precious metals are likely to continue to deliver positive alpha at the moment. But we want to see gold keep up about 1785 on COMEX, and silver keep up about 22.25 on COMEX. If it does that, until we can see this tailwind continuing for precious metals. But in the short term, if they were to break that, it'll probably be in sync with the dollar going above 105.82 dollar index. If it does that, we got to take profits on the precious metals here.
All right, Jay, we'll leave it there. Thank you so much for joining us. It's always a pleasure having you with us here on CNBC TV 18. The market's up about 20 points from in the last 15 minutes or so, but down 200 points. 17,896 is where we are at. We'll take a quick commercial break here, but when we come back, we'll get you what Nimesh is picking up on D Street Chatter, conversations from dealing rooms. And of course, our technical experts will be with us for BDST trading ideas. Stay with us.
Welcome back to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal newsroom. Well, for the time being, the markets have bounced close to around 50 points from the day's low. So that's, at least some bit of stability, though those bounces are getting sold into. So we're back below that 17,900 odd mark. Mitesh Thakkar is back with us. Mitesh, what are you making of today's market action? Well, it's looking a little bit jittery. The Nifty Bank yet again is underperforming. And the important part is the 41,880. Well, that's under threat as we speak. We're only 30 points away from there. Your sense, Mitesh?
That's right. I think, the Nifty touched the low, and the Bank Nifty actually, the low which we got on 23rd was on a closing basis 41,668, so 41,700 thereabouts. Broadly, it's the market, which when the bounce back has got sold into, and the near-term indicators have also been damaged. So high probability of markets breaking in 17,800 eventually. So in that sense, right now I have one buy and one sell. ICICI Bank is a STBT kind of a call. Here, I think, I would look at a stop of about 865 and a target of around 845. While HUL is holding out very nicely. In fact, that's given good support to the Nifty. So HUL will take as a BTST kind of a call with a stop at 2632 for targets of 2665.
Got it. Okay. All right. Mitesh, thanks a lot for that. We'll come back to you for a final word before we wind down. But for the time being, let's get a better sense in terms of what's going on in dealing rooms. On our special segment, D-Street Chatter, Nimish is with us. It's 3 p.m. today. Nimish, what are you picking up? I mean, clearly some bit of concern, a little bit of jitteriness in the markets. How are you reading it?
It's tough market. That's been the trend for the last many days. If you look at today's move, we virtually given up all of yesterday's gains. But the big difference is yesterday, the only sector which helped us rally was IT. Today there is broad-based selling. So while on the up move, only few stocks did well. But on the downtrend, many of the stocks are underperforming today. So today it's hitting the portfolio of not only traders but for investors as well. That's the overall feedback. I don't have too much of a handle on the flows today, but at least the feedback is there's going to be a small market at close selling basket at a leading FID. So might see some selling pressure towards the last half an hour of trade. That's the overall feedback. As you rightly pointed out, the big sector underperformance is coming in banking, and that's where a lot of retail position was there, and that looks like it's unwinding now. Whether it's not in the PSU banks but also in the private bank stocks, there is a bit of pressure in today's trade. Having said that, I've been saying consistently for the last many days now that we are stuck in a very narrow range between 17,800 and 18,300. So that has to break on either side for a big decisive move. I guess today for a change, there is a bit of sector churn happening. So pharma is standing out today. A lot of pharma stocks are buzzing in trade. On the other side, a lot of Adani stocks are under pressure. Banks are under pressure. So it looks like it's more of retail pressure than the overall institutional pressure. But still the feedback is there's going to be a small market at close basket selling from a leading FI.
Okay, all right. Nimish, I think the only glimmer of hope is at least the midcap index is down only around 0.5%, while the Nifty is down close to around 1%. So let's see how that goes. So there'll be plenty of stocks that are unfocused, right? What are you picking up?
So in terms of individual names, the first stock on my list today is IEX. While the markets are down today, that stock is marginally in the green. I believe some bit of buying traction is back in this particular stock, and there is a bit of general interest among the larger institutions. So that's IEX in today's trade. The volumes are expected to be on a higher side today. That's the first one. The second stock is BCL. We normally don't talk about this stock. Yesterday the stock was locked at 20% upper circuit. Today again it's buzzing in trade. There is a board meet scheduled on 12th of January for fundraising, and I believe some large HNI investors are likely to participate through preferential issue, and hence that stock is buzzing in trade. And the last stock is Bajaj Finance. It's been a mysterious pain for a lot of domestic investors, been a big underperformer, and I believe for the last many days the underperformance is largely because one of the leading domestic mutual fund over a large chunk has been on the sell side, and hence that stock is under pressure.
Nimesh, for that, let's invite Abhiram Elliswarupu, the head of India Equity at BNP Paribas India. He's with us on the show now. Abhiram, afternoon, and thanks for joining in. Your Nifty target of 19,650 doesn't leave a lot of upside from current levels. What is it that you expect?
Thank you for having me on the show, and Happy New Year to all of you.
Happy New Year.
In terms of the Nifty, thank you. In terms of the Nifty target, yes, the upside is over a 12-month period, and it factors in about a 9 to 10% potential upside. But having said that, as a house, we've taken a view where we are actually quite cautious on the markets in the first half of the year. So I wouldn't actually be surprised if we first see a correction and then maybe a bounce back later in the second half. So therefore, this is what is factored into the Nifty target.
Abhiram, the earnings season is upon us, and I guess now numbers will be kind of closely watched. If you remember last quarter, maybe except banks, where we saw not upgrades but earnings estimates were met. Most other sectors saw a little bit of pullback in terms of downgrades, basically, earnings downgrades. What's your expectation broadly this time? It's kicked off with TCS already, and I'm assuming you've heard what they've told us, but what is your sense?
Yeah, I see the trend of the last many earnings season. We've had roughly half of the companies beating estimates and maybe about 30% kind of in line. And in the last earnings, the ratio of cases was a little bit higher than normal, and that was a result of elevated cost pressure more than anything else. And I think that kind of a trend may continue in this quarter as well. So broadly, you may not have a massive change in the earnings estimates, because even after the last earnings, we just saw maybe at an aggregate level a couple of percentage points downgrade in earnings. I think something similar may happen this time. What I'd, however, look out for is any sense on 2 points. One is how the rural economy is shaping up, and secondly, how is the capex cycle looking, because these two are critical for the overall India view for the full year.
Okay, all right. Hi, Abhiram. I wanted to ask you about a couple of other sectors. The insurance space, that's been actually an underperformer. 12 to around 18 months, that's been underperforming. But in the last maybe couple of weeks, the last fortnight or so, we're seeing some traction out there. Do you believe that now the sector is set to do well? That's the stock price movement. Under-penetrated, we get that point. But stock prices will start reflecting that?
Yes, I do think so. In fact, I recall being on your show earlier a couple of months ago saying that we are positive on insurance from a structural standpoint. Like you mentioned, it's an under-penetrated market, India, and the stocks haven't done much in the last couple of years or so. Valuations are still supportive, and if you see the latest data that's come out for December as well, looks pretty decent, especially the large private insurers are doing pretty well, and I think those market share gains will continue. So it's a space that we like, not just from a near-term perspective, but also over a long-term structural basis.
Abhiram, you have to make certain assumptions, right, when you have to come out with a call in the sector. So when it comes to IT, where you have a counter-consensus constructive call, so you're basically bullish on technology, what are the assumptions that you're making when it comes to the kind of tech budgets, the kind of spending that we are likely to see from the clients of IT services company, and the growth rates that we could see? Because the street is currently penciling in a significant decline in the growth rates.
Yes, I think growth rates will probably fall compared to what we've seen in the last couple of years. But having said that, I think tech spending broadly is still healthy at an enterprise level. And I think where we differ from the street on two counts. First is that we think demand will be a lot more resilient than what the market is expecting. In other words, the fall in growth rate will not be as sharp as people think. That's number one. And number two is that the pressures on costs also will start to ease going into the next few quarters, and that's because attrition will probably start to come down, and broadly, when you enter in a situation like this, a recessionary environment, other costs also start to come down, such as travel, etc. So broadly, I think that the margins may not fall. If anything at all, they may actually expand, and demand will overall remain resilient. And over the last 1 year, IT has underperformed quite significantly. Most companies offer dividends. In some cases, they also question the case of buybacks as well. And therefore, I think that it's a reasonable sector to be positive on, at least on a relative basis for this year.
Abhiram, you like the diagnostic space, right? Which ones in particular? Because some of them have really been smashed quite good. Metropolis comes to mind, even names like Dr. Lal, etc. Anything in particular?
Yeah, I mean, as I'm very difficult to go into individual names, but as a space, what we really like is we're looking at this as a bit of a dark horse. You see, the sector's underperformed significantly over the last 12 months or so, maybe even longer than that. But having said that, I think the market's now understood that the COVID benefit that they had was a one-off, and it's beyond them. And in the past 4 to 5 months or so, you're starting to see competitive pressures come down, especially from private equity listed private players, for example. And you're starting to see the testing levels also starting to go up. And from a longer term structural perspective, obviously, the urban Indian is getting more health conscious and so on. And so I think proactive testing will also continue. So in short, I think the space is more a call on a combination of a mild recovery combined with the significant underperformance that we've had. And it's a dark horse. That's the way I'd put it.
Okay, all right. Abhiram, it seems your contra-constructive view on IT seems to be playing out at least for the last 1 hour or so. TCS, as we speak, has moved to the high point of the day. It's recovered considerably from the low point of the day. So that's good news. There is some caution on the IT space, but I guess we have taken your view on board. Before we let you go, you're also pretty positive on telecom, as well as a couple of media stocks. Could you name out a couple of there? I mean, from the telecom space, there's one player that's struggling. There's another one that's into other businesses as well. And there's a core telecom player. So which one are you positive on from the telecom space? And if you could give us an insight into media stocks as well.
Yeah, I mean, on telecom, the call here is that the space is going to consolidate going further. You'll see market share gains for the large two players. That's the call. But also a bigger kind of observation here is that telecom services are now core services in that they're almost like staples. And the consumer, we think, will be more receptive to price increases. And we expect more price increases over the next few quarters or so. So in short, you'll probably see a resilient space with reasonable demand and price benefit as well. So that call on telcos. On media, I think the real story here is that you have about a couple of names where cash flows are quite decent and also the dividend yields are decent. Sector's not done very well. In case you kind of want to factor in some kind of a rural recovery in the second half of the year, then that will also probably translate into increased ad spending. And that's one area that could be a catalyst for the space. So media, a couple of large names, and in telcos, a couple of the large two names. Those are the ones that we're looking at. Broadly, our positioning is quite defensive in the first half of the year. If you see, it's just the whole thing is about focusing on cash flows, dividends, and things like that. And as you get into the second half, maybe to add more risk.
Fair enough. That point is taken. Abhiram, do stay on. We have a few more questions for you, but need to slip into a break. But as we do that, we want our viewers to listen into the market opinion that we got earlier today from Sandeep Bhatia of Macquarie Group.
Continue to buy IT in small bites over a period of time. I think the real message to us was the fact that the US is not falling apart as much as people thought in the middle of last year. There is definitely pressure on the BFSI space that will have some impact on the IT sector, but overall the companies are still saying that they are able to manage. I think this is one sector where valuations are still in favor of us as the investors. We like Tata Motors. We like it for the India business. JLR was a big surprise, the free cash flow generation that happened in the results that just came through. So I think to that extent, JLR was the big positive surprise, which is why the stock is up. But JLR still remains the biggest challenge structurally for the business. We buy Tata Motors, we like Tata Motors essentially for the India business. One thing that I want investors to understand that as we go towards electrification, the entire automobile proposition for the buyer is changing. From foreign investors is definitely a big focus on China. China is the flavor of the season, especially with the opening up which has happened. First quarter, we see flows moving towards China. We see selling come through from foreigners on India. And that's definitely one reason why the markets continue to be flattish. And at least for the first half of the year, we will definitely see reallocation. Banks, we've broadly given comfort. We always have preferred large cap names. So, we like HDFC Bank and we like ICICI. So definitely those names we continue to like. But yes, even in the PSUs, the large cap names, SBI and BOB, we are going to stick with that.
Okay, welcome back. We've got the market, which is recovering a bit, by the way. 185 points is what we have on the Nifty on the downside. And from the low of the day, which is 17,856, this is, quite a decent recovery, which is coming through almost 65 points from the day's low. Actually, from even 245 or so, we've seen a decent pullback. At about 245, we were at 17,860, and which actually I think was the day's lowest point. from where the markets come up very, very nicely. Mitesh is with us as well. Of course, Abhiram is with us. Abhiram, bringing you back shortly. Mitesh, just a quick sense on what you're seeing out there on the screen. Anything incremental?
See, Prashant, the understanding is that, while there is some kind of bounce back happening, this isn't showing the requisite strength, to suggest that this bounce back will possibly sustain and move higher. So my sense is that I think in case you want to take into position into you want to take position in the Nifty, I think a good idea would be to wait for around levels of 17,940, which is another 25-30 points away from here, and then take a shot with the stop above 18,000 for a retest of at least 17,800 and maybe even lower levels.
Okay, so no trade right now. Wait for a short position if the Nifty makes its way towards 17,940. That's the technical call. But as we've been pointing out, there has been a 60-point recovery from the day's low, and it's led by names like Bajaj Finance and Bajaj Finserv. These stocks have surged. Power Grid, Coal India have made a bit of an up move. BPCL is the other one, which is now back in the green. So some of these stocks are seeing a bit of buying coming through. Bajaj Finserv, Coal India, Power Grid. You've got Tata Consumer also seeing a bit of an, tick up, and BPCL is getting bid up as well. Abhiram, you were saying that in the first half of the year, you would be cautious, you would prefer stocks which yield dividend, the more of the value play rather than growth. Would you be looking at names like Power Grid or Coal India, which are, the dividend plays in India, PSUs, which give you good dividend?
Yes, I think historically these kind of names have worked in a defensive kind of a market that's selling off. The first thing that you would probably look for is companies that have cash flows, firstly, free cash flows to boot, and those that pay dividends or / have buyback. The ones you want to really avoid are the ones that have debt. So in that sense, I've always kind of liked some of these companies which have not only dividends, and it so happens that many of them fall within the PSU space, but that is the space that actually tends to pay more dividend than others.
Okay, all right. Abhiram, if you had to, get rid of some part of your portfolio, which sector would that be? I mean, what's already run its course?
I mean, if you take the real short term, then I am somewhat concerned about financials because they have done well in the last 3 to 4 months or so. I mean, we do like them from a longer term perspective, especially from a 1-year view, especially the high CASA banks that we like. So if the view is that the market is not going to do very well in the first half, then it's highly unlikely that banks will not correct. So that's one space. And if you take a full 1-year view, then I'm generally trying to avoid consumption here because we just haven't had enough data points to show that things are improving on the consumption side. You see, consumption in general, especially has annual GDP growth for many years now. And that really hasn't changed or isn't showing signs of changing in the immediate future as well. So consumption as a whole is a bit of a concern. So far, we've had a K-shaped recovery, but there are signs that that's somewhat behind. Looking at the big wage hikes that people have got over the past 2 to 3 years, maybe the effect of that is starting to go away a little bit. The other space that we are somewhat cautious on are industrials as a whole. I mean, we do like some parts of it, for example, the ones that are geared towards defense or railways, but the broader space looks expensive to me. And in general, we want to be careful of those. So if I were to kind of summarize what I just said, overall, focus on companies that have cash flows for the time being and where there's a dividend possibility. But more than that, also evaluations are somewhat supportive, generally avoiding expensive names here.
Mitesh, any thoughts on ABFRL? I don't know if you've looked at the stock. I put that out in the morning on Market Laser. It's broken below that trend line all the way from the lows of 2020, May 2020. Any thoughts? Mitesh? Okay, I don't think Mitesh can hear us. Later, I guess. Abhiram, thank you very much for joining us. Appreciate you joining in and running us through what you're making of things. And it's always a pleasure to have you with us here. 180 points lower is what we have on the index at 17,916 at this point in time. So, not at the day's lowest point, and I think that will be a relief for some. But we did break through to very, very close by levels as far as the 18,000, as far as the lows of December 26th are concerned on the index. So it's been a puzzling session, as I said earlier. Sharp, decent move yesterday, a solid close, and today, even as the rest of the world did just fine, there was a sharp reversal. I mean, the market sort of giving back almost all of yesterday's gains, and then some more by close. So very, very large candles, 3 days in a row. Friday, of course, we saw that big sell-off. Yesterday, we saw that big recovery. And today, once again, we've seen a very large volatile move. Prima.
Well, by the end of it, the Nifty and the Sensex are down close to about 1%. The Nifty has defended the 100-day moving average and is closing above that 17,900 mark. So it's a down day, but we are holding above 17,900. It's the IT index which made a remarkable recovery from the day's low. At one point of time, the Nifty IT index was down 2%, but ends with a cut of close to about 0.8%. And names like Wipro are back in the green. TCS as well recovered close to about 1.5% from the day's low. The midcap index ends lower, down 0.5%. But it's relatively speaking, its performance was better than the frontliners. Tata Motors, Sona BLW, these were the two big stars in the automotive pack, both ending with gains of close to about 6%. On the losing side, banks were weak. IDBI Bank down 5%, Bank of India, Bank of Maharashtra, UCO Bank, PNB across the board, sharp cuts of 3.5%, 4%, 5% coming in on very large volumes. Cyient, where its arm, DLM business, is looking for an IPO. They filed the DRHP with SEBI, ends with a gain of 2%. Rate gain, Anand Rathi has initiated coverage with the buy on this travel and hospitality SaaS player. They've put the target price above 400 and the stock was up close to about 3.5%. Safari Industries too, there was a brokerage note which got the stock pretty excited in trade. Apart from that, on the gaining side, you had strength coming in on Nagarjuna Fertilizer. That was higher. Orient Green saw gain, and Paytm has been up in the green for 8 consecutive sessions, and this is the longest winning streak Paytm has seen since its listing in November of 2021. So today as well, Paytm was up close to about 2%. And Adani Transmission, the Adani Group stocks were under pressure for a greater part of the trading session, but in the last 10 minutes, names like Adani Transmission, Adani Total Gas managed to recover all their losses and end in the green. With that, it's a wrap and closing bell. Our Tuesday special Commodity Champions comes up next.